Do you want to know about best small cap stock? You can buy it at 21.4% below its estimated fair value and get a return of more than 20%. Now, all these numbers sound like an opportunity. If you like to be well informed and make educated decisions, then don't forget to share, like and subscribe to our channel. Let's find out more about GPPL. Gujarat Pipavav Port Limited, based in Mumbai, India, was incorporated in 1992. It engages in the construction, operation, and maintenance of the port at Pipavav in Gujarat, India. On macro level, APM Terminals deals in 4 trade sectors covering ceramics, container and petroleum, spice and agriculture and metals. The company's port handles container cargo, bulk and break bulk cargo and liquid cargo. And it offers roll-on roll-off, storage, maritime personnel, towage, rail out by bill of lading services. APM Terminals Pipavav is well connected to Cochin, Tuticorin, Kattupalli, Hazira, Kandla, and Mundra, focused on bringing volumes from all cargo generating areas on the west coast. The major stakeholder in GPPL is AP Moller Maersk with 44.01%. Other institutional investors holds a 40% stake. There has been no dilution of shares in the past year. Here is list of top 6 shareholders: AP Moller Maersk AS, ICICI Prudential Asset Management Company Limited, HDFC Asset Management Company Limited, Schroeder Investment Management Limited, JP Morgan Asset Management Incorporated, L&T Investment Management Limited. On financial checks, GPPL short-term assets exceed its short-term and long-term liabilities. Their debt-to-equity ratio of 2.1% is satisfactory and well covered by its operating cash flow. GPPL has high-quality earnings from their operations. The company reported net profit last year, but it's lower than the previous year. The reversal of deferred tax liability accounted for in the earlier years led to last year's relatively lower profit margin than the year before. The strong cash-generating ability from core business supports GPPL's forecast earnings growth of 26.5% per year, and it proved by increasing cash flow from operation for the last 2 years. Institutions increasing their shareholding in GPPL is another proof of their credibility in the investors' world. Now, if some things are working for them, some things stand out from their results. For example, GPPL's operating expenses have increased by 8% from the previous year due to maintenance dredging and cargo handling expense. They were also thrown a curveball in the form of Cyclone Tauktae. GPPL survived that, and COVID, both overcoming all challenges. Despite the slowdowns and various challenges last year, GPPL and its associate company PRCL, looking at the proud moment of commencement of the dedicated freight corridor, a landmark project for India. The rail infrastructure connecting into Pipavav Port, and the rail sidings inside the port are all compliant to run double-stack electric freight trains. Then last but not least is the dividend. GPPL's current dividend yield of 4.5% puts it in the top 25% of country's dividend payers and top 50 dividend stocks. If you are also a dividend investor and loves to grow passive income, click on the link above or from the description box to see the top 10 dividend stocks for this month. GPPL deserves to be on our review list. Now let's see where it stands on our ranking list. It is finishing at 6th place and has been on our top 10 list for the last 3 months. Don't forget to like and share the video. And if you haven't subscribed yet, then click on the red subscribe button to make it gray. And while you are at it, click on the red bell icon to get notified when we post another video.